Hello and welcome to the Weekend Investing Daily Bite of 6th of December. Another good day, I would say. Market tried to brush off the RBI net, no cutting of rates. There was a dive down at that point of time, but recovery from that disappointment also. So markets are, uh, you know, allowing all not so positive news to be brushed aside, and they are still consolidating and staying where they are. So very good positive undercurrents from the market in the last 1 week. We have seen on GDP, on expectations of RBI rate cut today, but didn't happen. CRR was cut, but rate cut didn't happen. So this kind of a is not really uh, catering to the negative news is a sign of positivity actually. So we will dive more into this. But in the second half of the video, we will talk about this big bankruptcy that Elon Musk is talking about for America, and we'll dive into some details on this. And can this, disrupt rest of the world as well as they go through this? MIMT All Cap, our strategy is celebrating its 6th anniversary. Please use the code All Cap 6 if you wish to enroll for it. Do read the disclaimer and do subscribe to the strategy if you haven't so far. Sorry, subscribe to the YouTube channel if you haven't so far. Uh, where is the market headed? The market consolidating after a very volatile Thursday yesterday. And in the last 10 odd sessions, we've gone from, complete despondency that market cannot go up for a long period of time to a point which is, a stone's throw away from an all-time high. So Nifty consolidating today at minus 0.12%, so neither here nor there. But the good part is that despite having expectations that RBI will cut 0.5% or 0.25%, Nomura was saying 100 basis points. RBI did not cut today. Rather, it seemed a bit hawkish. Although CRR was cut, so banks will get a lot of liquidity in their hands now because they don't have to put up so much money at the RBI for the deposit. So banks' liquidity will be flush, and this mismatch that has been happening in terms of credit growth and loan growth or deposit growth. I think that is what they're trying to sort of meet that. Earlier also RBI was saying that deposits are not coming into the banks because they are getting channeled to uh, stock markets, and growth is taking off. Credit card loans are going up. So this was getting a bit riskier, and that is also, fueling inflation. So they're trying to provide liquidity in the system, but not yet cutting rates because they still feel that inflation has not yet come to a point where rates can be cut. So some people are disappointed. Market was expecting some cut, at least 0.5%, if not 0.25%. But that didn't happen. But market did not sell off after that. So that is the big takeaway for me, that the market did not succumb to poor news, thus sort of implying that the undercurrent is reasonably strong. And you can see that in other parts of the market. So Nifty Junior up 0.76%, very handsome gain in the last 10 days here. In the Nifty mid cap, again 21,600, very nice gains. We were at nearly 20,000 just less than a month ago, and we are again at 21,600 and less than 1,000 points from the all-time high. Small caps also, on a tear in the last 10 odd sessions, plus 0.5%, and it's just not, wilting under any pressure right now. So a lot of folks who are, sitting in cash or, talking about the market cannot go up are now surprised. Bears, of course, have been squeezed dry already, and if market starts to make new highs, I don't know what will happen to them. So a sort of lessons continuously markets is giving you lessons, and what I would like especially young investors to see is what lessons the markets are offering you, and what can you derive out of that. So these are classic lessons of having strength in poor news. Whenever you find stocks, indices, sectors which are not falling with poor news, it tells you that there is relative strength, there is inherent strength in those sectors or indices or stocks, and they will surprise everybody. So markets are designed by nature to surprise you and me. They are not designed by nature to to go as per your thought process. The surprise element is the basis of on which the market runs. The idea is to surprise most of the people most of the time, and that's what keeps the market rotating between ownership and under ownership, and that's how the market sort of moves forward, two steps forward, one step back, and so on and so forth. So once you become, in case you do become a master of predicting, forecasting, the markets, then of course you can try to time it. But for most people, I would say more than 99% of participants in the market, don't try to do that. Don't try to predict. Don't try to forecast, because you really don't know what is going to happen. Nifty Bank Index is also now very near the all-time highs. Banks will get a huge benefit, and this will be evident in the March results likely. The kind of liquidity that they have been that is getting unleashed for the banking system. In momentum advance versus decline, you can see 270 advances to 228 declines. So the advances are slightly in the favor in the heat maps. Not much to talk about in the top 50 stocks. Axis Bank, Tata Motors, Bajaj Auto were the ones which were leading the Nifty. But you have also had, some poor outcomes from ICICI Bank, HDFC Bank, even State Bank was down. Reliance, Infosys, Wipro, Bharti Airtel. These were some of the laggards for the Nifty 50. In Nifty Next 50, you still had a lot of green. Some public sector stocks also picking up. Commodity stocks like Vedanta really boosting in a big way. Varun Beverages up, NHPC, JSW Energy, Tata Power, Motherson, Indigo, Zydus Lab, REC, IRFC, Bank of Baroda, all these stocks really did well. Some Adani stocks are continuing to bleed. DMart was down, Pidilite was down, Ambuja Cement, Torrent Pharma, BHEL, and Chola Finance was down. In the sectoral trends, you can see metals and autos took the lead today. So there is a very nice, round robin, or you can say relay race that is happening. One sector hands over the baton to the next one for the next week or next few days, and then they start running. So IT, pharma, energy, real estate, they were on the back foot today. And public sector enterprise, along with public sector banks, along with autos and metals, were driving it. So barring FMCG, you have all green now for the last 1 week. So all the recent losses have been taken care of. Within metals, you had Vedanta go up 6.1%, Hindustan Zinc up nearly 2%, Jindal Stainless, Jindal Steel, NMDC, SAIL all doing quite well. There is expectation that uh, on the export front, the Chinese uh, market share may be up for grabs by other markets, and maybe Vedanta and Indian players can make use of that. In the stock spotlight, ITI has really gone up today in a big way, 13% for the day, and it is again nearing its previous highs near 320. Now let's come to the story of the day. So big bankruptcy warning from Elon Musk to America. Some of you may have already read about it. In case you haven't, we'll give you a rundown quickly. So what is this warning about? So national debt of US is going through an exponential phase. It is more than $36 trillion now, and I think most of us don't know how many zeros are there in 36 trillion, and how much more is getting added per day. I mean, it is just a mind-boggling number, in the sense that there was some figure that in just 1 week they are adding close to 80 or 90 billion dollars. So in a few weeks time, they are essentially blowing up as much money as we hold as reserves as a country. So that is the kind of scale of uh, potential disaster that is happening. So this 36 trillion, there are about 350 million people in living in America. So about $106,000 is the debt per American, if you see it from that from on a per capita basis. And Musk is saying that the situation is terrifying, and this is equivalent to somebody having an income of 1 lakh rupees and spending 2 lakh rupees, and you are basically borrowing to meet your expenses every month, and then at some point of time people will stop lending to you, even if you are the gold standard of whatever power or innovation or whatever it may be. At the end of the day, there is no free lunch. I mean, you cannot make money out of thin air if you are not meeting the budget. If your income from your taxation is much lower than what you are spending, for some period of time you can manage somehow. but that cannot be an endless process, and that gap is continuously increasing in a very big way. So the US has the largest national debt globally. It is majorly held by its public or overseas central governments like Japan and China mostly. Uh, the amount was 5.7 trillion. It is now 27 trillion within the last 20 years, and now it is 36 trillion. So just imagine if you were a person and you had a a loan of, let's say, 5.7 crores 24 years back, and now it has become 36 crores. So you've spent 24 years trying to give it back or trying to lower it, but you've not been able to, and now the interest component itself on your loan is so big that it's starting to become a big chunk of your income. uh, 16 trillion of that has come just post pandemic. So this has also helped in all asset classes going up, because this money basically got printed out of thin air and essentially through some mechanism or the other went into different asset classes, and that demand has lifted the boat. So if you actually see, the base money has gone up by so much that asset classes going, let's say, 2x are actually where they were. It's just that the amount of money in the system has gone up that much. But because we are comparing today's value versus 10 years back, so we feel richer because we had 100 rupees then and now we have 200. But actually speaking, if you adjust it for inflation of base money, then nothing really has changed over that period of time. And average citizen is $106,000 under the uh, under debt. So this is the total revenue. You have a income of 4 lakh rupees and you are spending 6 lakh rupees every month, or you can call it every year. You have an income of 4 crores and you are spending 6 crores every year, and they are hoping that we can continue doing this, and somebody will keep funding us this gap of 1.5 trillion, which is also continuously increasing. So you can see here, income taxes are this much, payroll taxes are this much, corporate income taxes only this much, and then other things are there, and then there is a lot of deficit that is available here. And they have to spend on social security, national defense, Medicare, assistance to individuals, interest on the debt. This component is growing very fast. Transfer to states and other spending. India also, we have all this. We also have nearly 5% of deficit, but the US deficit, the US used to be a surplus economy. They always were making more than they were spending. But in the last decade, or one would say 1.5 decades, since 2008, all governments all across the world have started liking this deficit budgeting. So everybody wants to spend more even if income is less, because by spending more you can in some sense buy votes. So Indian government also will spend on a lot of things which will make sure that their voter base will vote for them in the next election. So it is now less about managing the budget, but it is more about using the office to manage your next election polls outcome. So this is essentially a race to the bottom. uh, this cannot sustain. I mean, it is just not possible that everybody can be in a deficit, right? So the surplus countries are in fact moving out of the system. So who are surplus? China is surplus, Russia is surplus, maybe there are some few other, maybe Switzerland is surplus. So several of these places are looking very different from the rest of the world, and unless these other countries will pull up their socks, their cost of funds will continue to rise. So what US enjoyed for a long period of time was zero, 0.5% kind of rates. But now, if this is the situation and they're going into that hole, anybody who will take their paper will say, I want more interest. If you give me more interest, I'm willing to take the risk of buying the US debt. Just like for India. So as you go deeper and deeper into the hole, your lenders will start to ask more and more interest rate. Just like when you have credit card debt, they know you are in a big hole. That's why you have a credit card debt. So they will say, okay, give me 36%. I'll lend you the money for a month. So that is the sort of problem it is actually the same problem what individuals face, what corporates face, and what countries face. There is nothing different, because finance is not different for any entity. It is exactly the same. There is no free lunch and there is no free money. So They have now created a department. Sorry, they will create a department once Donald Trump is in the office of Department of Government Efficiency. This was named after that meme coin, um, Doge. So this department is going to be headed by Elon Musk and Vivek Ramaswamy. And this is going to be a very limited period formation of the department. So just to make sure that this does not become a bloated department in itself, they have decided that this will be on for a year and a half only, and they will, go left, right, and center and improve the efficiencies of the government. They are saying the mission is to dismantle the government bureaucracy, cut wasteful spending, address financial crisis. So all sounds very good on paper. Whether they are able to do it or not is because every time you will try to uh, you know unsettle a settled system, like the bureaucracy layer is there. Now if you tell them that, we are going to cut 50% of your jobs from tomorrow, they will be out on the streets. It will not be easy to do that. If you say that we will cut 50%, 30% from Medicare or from this public social welfare that was happening, people will be out on the streets that, our entitlement is there. So all this, while it sounds very good on paper, but it's very, very difficult to execute, especially in democracies where there is, opposition, and then the people have some rights, and that is why, this if this is very successful, this mission, I think it will have a very good percolating impact on a lot of other economies in the world, because America will lead then with this, dismantling of government bureaucracy. And I hope that they can have a successful outcome of this, and India can emulate some of it going forward, because India is also, saddled with a bureaucracy and kind of spending and subsidies which are not going to allow us to, grow any faster. So the idea there is to cut 2 trillion in spending. So 2 trillion per year is what they want to cut from their current 6.75 trillion budget, which is a huge amount. Uh, they aim to eliminate waste and improve resource utilization. They want to tackle wasteful spending, and they won't have taxpayer money to be efficiently used and be accountable. The US market somehow is not bothered about it right now. Uh, I don't know what kind of impact it will happen once they start doing this. What kind of impact will happen on the markets? That is yet to be seen. But this is for sure that in the next 2 months there is going to be some big changes that are going to be attempted. How and when they will impact the markets in what way is yet to be seen. But let's hope that we are at the bottom of this inefficiency curve and we are able to get out of this. So let me know your comments on this subject. It will be nice to hear from all of you. Thank you so much for watching these daily bites. Do like and share these videos if you do like them, and subscribe to the channel if you haven't so far. Thank you. Bye bye.